Hey everyone, welcome to another video by Optionables. My name is Saket, and in this video we are going to discuss the weekly summary, market outlook for next week, and also more about our trade. So which was the easiest day to trade, which was the hardest day to trade, and why. So in between we are also going to discuss little about the economics, what is happening in US, so why did the US markets fall after the jobs data. So we are going to discuss more about that in this video. Before moving on, I would also like to tell you about a lot of things which we have started which can help the retail investors. The first thing is every day we have a morning blog which will be uploaded before 9 a.m. So the blog link is optionables.in/blog. You can directly go to our website and also visit the blogs page. So here we'll be updating the market outlook, what we have for that particular day. We'll also be posting charts, open interest data, and telling you why we expect a particular thing. Apart from that, on the Optionables main Telegram channel, we are also sharing our trades, what is the logic behind taking the trade, and in case if you do any adjustment, what is the logic behind adjusting and also exiting the trade. So all this is mainly done for educational purpose, and I would also request you to consult your financial advisor before you actually end up following any of these. So apart from all of these, there is also an automation platform by Optionables known as Target, which you can access by visiting target.optionables.in. I would also like to make you aware about a lot of fake Telegram groups and fake Instagram profiles which are selling courses to people under the name of Optionables. So I would like to tell you one thing. So we do not sell any paid courses. We have a couple of courses on our website which you can access it for free using the coupon code mentioned in the description below. So if anybody is contacting you on Telegram or Instagram telling that we are from Optionables, then I would request you not to fall for the trap. So they are actually trying to lure people, asking them money by providing any paid services. So now let's quickly move on and look at the market summary for this week. Now coming to the market summary. On Monday itself, we had the RBI policy. So we had one holiday on Wednesday, and Monday we had the RBI policy. So in RBI policy, as per the expectation, the rates were increased by 50 basis points, and this was a positive news for the market because it was in line with the expectation. And also the governor of RBI gave a very strong outlook for Indian economy, because of which we got to see really good buying coming in stocks. So after the policy, we saw that Bank Nifty rallied close to around 1500 points, and Nifty also rallied close to around 300 to 400 points. From the bottom of around 37,600, we went all the way to 39,500 as a top for this particular week. When it comes to Nifty also, from around 16,800, we went all the way close to around 17,400, and all thanks to the RBI policy. If you actually look at the institutional activity during this week, so it is more or less, I would say, flat, that FIIs and DIIs ended up purchasing and selling almost for the same amount this week. So there was not much of an institutional activity, and most of the market movement might have come from either prop desk or individual traders like you and me. When we look at the top gainers and losers, so in the top gaining list, we had the metal sector. So all the metal companies like Hindalco, Tata Steel, everything ended up performing really well. Apart from this, we also had Titan, which actually made to the top gainers in this week, and the reason was because of its results. So we overall got to see around 18 to 20% growth in the net profits, and this was above expectation, because of which even Titan ended up surging close to around 5%. The results came on Thursday, and Friday we got to see a very good move in Titan. Right? So now if we move from Indian markets to the US markets. On Friday we got the US job data. So US job data was little higher than expected. So they were expecting US to add close to around 2.5 lakh jobs, but actually US economy ended up adding close to around 2,65,000 jobs. So now you might ask, isn't adding jobs good news to the economy? Because if people are getting jobs, then that is supposedly a very good news to the economy. Even the unemployment rate fell from 3.75% to close to around 3.5% because of the new addition of jobs. But the thing is, good news becomes only good news when everything else is fine. Why exactly this was perceived in a negative way is the Fed is trying to slow down the economy because they are continuously raising the interest rate because they want to slow down the economy. The inflation is very high. So now if there is huge amount of job addition, that means the companies are hiring more number of people because they have so much demand for their products. So if the demand is high, that means that the economy has not actually slowed down. So that means the inflation can end up remaining at higher levels. So because of which they are telling the Fed will further increase the interest rates. Fed had already made it clear that they will be increasing the interest rate by 75 basis points, but they also fear that this continuous increase by Fed might also lead US into recession in the coming days. So that's the reason when you say 2.5 lakh jobs, if the addition was say somewhere around 2.4 lakh jobs or 2.3 lakh jobs, then that would have been perceived in a very good way. So now the thing is, it's quite an irony that even if more people are getting employed, it is being perceived in the negative way. There is also a fear that this continuous addition of jobs would have taken place now, but when the interest rates start to increase continuously, then this is going to lead into recession, right? So the thing is, when in 2020 when we were hit by COVID, so government was little careless in the US. So they ended up printing a lot of money, giving out a lot of free money, I would say, not even just printing money, they gave out a lot of free money, because of which this led to a huge inflation. So now to control that, the US economy has to suffer over the course of multiple years. So it is not just 1 or 2 year period, it has to suffer over the course of multiple years. And also United Nations Conference on Trade and Development has also warned US, if you keep on increasing the rates at such high intensity in such a short while or such a short period of time, then it will hurt your economy plus also other developing economies. So following this data, US markets also ended up tumbling. So Nasdaq fell almost around 4%, Dow Jones and S&P fell close to around 2.5-3%, and because of which even SGX Nifty ended up falling close to around 250 points. So how Asia is going to open tomorrow is going to be very crucial for our markets also. So if Asia is going to open flat, then we might see some recovery. If Asia is again going to open with 2 or 3% negative, then we can expect this negative sentiment to continue. Since we are done with the market summary now, so now we'll move on and look at the trade summary. So this week's trading was quite flat, to be honest. So we ended up with marginal gains of around 1 lakh or 1.5 lakh. So we had holiday on Wednesday, and on Thursday we could have made it big, but unfortunately during the last move we ended up getting hit a little bit, right? So now we are going to discuss the easiest day to trade and the hardest day to trade. So the easiest day to trade was definitely Friday. So the market was absolutely flat, there was no big move in the market, and we felt it relatively easy to trade. And now I'm going to move into the screen recording where I will show you why exactly we felt Friday was the easiest day to trade. Hi everyone, first we are going to discuss about the easiest day to trade. And as I mentioned, the easiest day to trade for us was Friday. The reason is pretty simple. The thing is, as soon as the market opened around 39,100 on Friday, we ended up creating a 39,000 short straddle. So that is right over here. So we shorted a 39,000 call and we shorted a 39,000 put, creating a short straddle. So the thing is, this was the intraday trade what we took. Apart from that, we also posted a positional trade on Telegram, which was a 38,000 and 40,000 short strangle. That is something which we continue to hold even now. Along with that, we had done this as the intraday trade. And the idea was fairly simple. Because it was pricing in close to around 900 points, we had a big range to play. Since we had such a high range of almost around 900 points, the idea was the moment it crosses or moves more than 300 points, that is 39,300 or 38,700, we might consider adjusting. But luckily for us, that time to adjust never came, because Bank Nifty traded in a very short range of plus or minus 200 points. So you can see right over here, Bank Nifty broke 39,000, then came down, came around 38,800, from there on bounced and went to 39,200. So if you actually look at it, it was 200 points on the upside, 200 points on the downside. Bank Nifty never moved more than 300 points, which means we never actually adjusted our trade at all. So overall, it was a very easy trade to trade. We just entered a position in the morning, held the same position till the end, and got relatively good TK. So this is how we ended Friday, which was a relatively simple day to trade for us. Now coming to the hardest day to trade was definitely Thursday. So again, I'll be moving into the screen recording one more time to show you why exactly we felt Thursday was the hardest day this week and what are the lessons that we can end up learning from this. So now speaking of the relatively hard day, it was obviously Thursday. So Thursday was relatively hard because certain view which we took in the market went totally wrong. Even though we didn't end up losing money, we lost the profits what we had made during the last hour. As the trading day started, Bank Nifty opened with a gap up, went all the way to 39,500 and then immediately came down. So while this happened, initially itself, we entered a position that is 39,200 put option short and 39,600 call option short. So this was essentially the range within which Bank Nifty traded the whole day. And the thing is, we would have made pretty good profit just holding on to this position. But the volatility was such that we actually ended up losing whatever we had gained. So initially we were with this position of 39,200 to 39,600. So as Bank Nifty went up, consolidated and finally broke. When it broke 39,500, this was the time when we actually adjusted. So the adjustment was pretty simple. We got this closer into 39,300 puts and we got this farther away to 39,800 calls. So the thing is, initially it was 39,200 puts and 39,600 calls, and as Bank Nifty went up, we shifted the position from 39,200 puts to 39,300 puts and 39,600 calls to 39,800 calls. By this time, we already were in a pretty good position where we had a profit of close to around 2 lakh. So I'll explain what exactly happened post that. So while Bank Nifty went up, we expected, because Bank Nifty had broken this level after quite some time. So let me just draw that again. So since Bank Nifty had broken this level after consolidating, we thought while this fall came, Bank Nifty might find support here. So initially this view went wrong. So as Bank Nifty came here, we expected it to find support and maybe bounce back towards 39,600. But our view completely went wrong there. So from a profit of around 2.5 lakh. So since this view went wrong and Bank Nifty started falling, we came down to a profit of close to around 80 to 90,000. So we had lost close to around 1.5 lakh because the view went wrong here. So post that, so again we went back to the same short strangle where we had 39,300 and we ended up shorting 39,600 this time. As Bank Nifty broke this, we thought, okay, whatever high it had made, most likely it will end up holding 39,600, and we went back to the same short strangle. But this time, while Bank Nifty started falling, so we also thought that Bank Nifty might end up holding this level as a support. So we thought, okay, Bank Nifty will come till here, maybe consolidate and again try bouncing back towards 39,500 because there was a lot of short straddles around 39,500. But unlike our view, Bank Nifty couldn't find support here also and it started further coming down. So while this happened, we weren't really sure whether we should bring our calls down all the way from 39,600 towards 39,400 or 300 because we somehow thought, okay, Bank Nifty might find support and bounce back towards 39,500. And because of that, we were quite skeptical on bringing these calls down from 39,600. So on the lower side, we had 39,300 puts, but we were quite scared to bring the calls down, right? So because of that, as the market started coming down and down, the puts started bleeding. We were at 39,300 puts, so that is somewhere over here. So because of this, our positions also started to bleed, right? So initially we were at a profit of around 2.5 lakh, and while market broke 39,500, our profits had already fallen close to around 1 lakh. And while this move continued further, and we went totally wrong with our view twice, right? So this time we went all the way from a profit to a 40,000 rupee loss. So that is where we ended. So we were at a profit of around 2.5 lakh, but unfortunately, because we went wrong with our view twice, we couldn't hold on to the profit and we ended overall day with around 40 to 50,000 rupee loss. So even though we didn't end up losing money on the particular day, it was quite hard because we gave up all the profits what we had made during the initial move. So because of this one reason, we would consider Thursday to be the hard trading day this particular week. And now finally we'll discuss what is the market outlook for next week. So if you see Telegram channel, we have a short strangle which we are holding, that is at 38,000 and 40,000. So a 1,000 point away short strangle. So tomorrow, based on the market movement, we might consider adjusting this, but I will also move into the screen recording where I'll be discussing certain OI data and chart data to show you what is the outlook for next week and what are the potential trade ideas. So now we'll be talking about the market outlook. And while I'm talking about the market outlook, this time I won't be actually looking at the open interest because we had the US jobs data. And because of this, we are expected to open gap down anywhere close to around 250 points in Nifty. So I'll just be discussing based on technicals because open interest tomorrow morning is going to be totally different than what it is today, because we are going to see a huge gap down, and because of that there will be extra call writing happening. Anything can happen. That's the reason we will rely more on the chart data rather than the OI data. So now coming to the chart data. So this is the daily chart of Bank Nifty, and it looks more or less clear that we have a very good support around 38,000. So if we just draw a line here around 38,000, so we can expect, if Bank Nifty is coming towards 38,000 from 39,200 right now, if it falls towards 38,000, so this is a good range to start buying, or there might be some bounce back from here, or buyers will definitely try to hold this level of 38,000, because it is not just once, it is multiple times where Bank Nifty has respected this and again bounced back from this particular level. But when we actually look at it, we might also see a sort of head and shoulder pattern getting formed here. So this is the left shoulder, the head, and the right one. So the thing is, irrespective of whether it's a head and shoulder or not, we can definitely expect some buying to come in around 38,000 because it has proven to be a very strong support, right? And one more thing is, the more number of times we actually test 38,000, it is going to become weaker and weaker as a support. But when we look at the higher end, again here the resistance seems to be quite clear somewhere around the level of 40,000, 39,800 to 40,000. So this is a level where we can expect some kind of a resistance to be faced by Bank Nifty. So that's the reason right now we are holding a 38,000 put short and a 40,000 call short, because we are expecting Bank Nifty to trade in this broader range. So we might be wrong here. So if Bank Nifty, if the negative sentiment continues, then definitely Bank Nifty is not going to hold 38,000 and it is going to fall below 38,000. So we are going to think of adjustments later on, but as of now, as long as Bank Nifty is holding between this range, we are not really concerned about adjusting, because we feel as Bank Nifty starts to fall, there will be some buying coming in over here, and even if Bank Nifty starts to go up, it is not going to be that easy because there will be surely some selling coming in over here. So if I have to give an outlook summary for Bank Nifty, I would say Bank Nifty might consolidate in this broader range, and any break above or below this range might actually trigger a move in Bank Nifty in one direction. So let us say we are crossing 38,000 and decisively closing below 38,000, then we can definitely expect a move towards 36,000, 36,200, 36,300. Similarly, if we are crossing above 40,000, definitely we can expect a move towards 41,200, 41,300. This is surely a possibility, but given that the global cues are not so positive, the domestic cues are fairly positive, so we might expect a consolidation to take place rather than a range breakout. And tomorrow is going to be a crucial day where we are going to find out what might actually end up happening to markets, especially Bank Nifty. So similarly, if we come to Nifty on the other hand, so we do have a very strong resistance coming in right around 17,400. So you can see it is not just the first time, multiple times 17,400 has acted as a good support for Nifty, but unfortunately we broke 17,400, we came down, retested, couldn't cross, and again we are coming down. So tomorrow again we are expected to gap down somewhere around 200 points. That means we'll be back to 17,100 level. So given this fact, we know that we might be gapping down around 100-200 points. I would expect Nifty to trade in the range of 17,400 to 16,800. So this is the broader range where we are expecting Nifty to consolidate, and any break above or below this range can definitely trigger a rally either on the upside or downside. So since we have broken, we came down, we took support around 16,800 and we have bounced back. And again at this point where Nifty had taken multiple supports, this turned out to be a resistance, and now again we are expected to open gap down and we are going to get back into this range. So if it was a good news, then we would have gapped up and we would have crossed this range in the opening. But unfortunately, because the US jobs data is not in favor of what Fed expected, so we are expected to come back into this range, right? So from here, which direction we are going to break is surely going to decide the next move. So whether we are going to break on the higher side or the lower side. But if you ask me overall, I would say since we have consolidated for well over 1.5 years, so I would feel that the bottom is nearing and we might sooner or later break all-time high. Maybe in the course of next 6 to 8 months, we should be surely breaking the all-time high, because there is constant flow of negative news and most of it will already be priced in by the markets. So anything post this might not come as a surprise unless it is really surprising, right? So overall outlook is I am expecting a market to consolidate in the broader range, be it Nifty or Bank Nifty, and any break above the ranges mentioned. So in Bank Nifty's case, it is going to be 38,000 to 40,000. Any break above or below this range, or similarly in Nifty's case, 16,800 to 17,400. So any break above or below this range, it can trigger a move on either upside or downside respectively, right? So this is the overall outlook, and as I told you, we are not going to use open interest for today, because tomorrow we know that the market is going to gap down and open interest will completely change, and the data what we have today might not be the best judge for the market outlook for tomorrow, right? So with this, we also come to the end of the outlook, and you can also follow Telegram, where we'll be giving you one trade update every week, and we are going to give you the logic behind the entry, logic behind adjustments, and also why we exited. So right now the trade what we are holding is in Bank Nifty, which is a short strangle 1,800 quantity of 38,000 puts and 40,000 calls. So this is the market outlook for the next week. So with this, we also come to the end of this video. So if you have liked this video, then do hit the like button, share this video and subscribe to Optionables. And don't forget to follow us on Telegram, Instagram and other social media platforms. You can also check out Target by going into target.optionables.in. And also most importantly, don't forget to report all the other fake channels as well. Thank you so much for joining.